Sanjay Guglani, who's CIO at Silverdale Capital, joins us from Singapore with his assessment of trade. Sanjay, the markets, especially the Asian markets, are reacting to the Chinese GDP number, which came in line with estimates, and they're maintaining that base level of 7%, which is really, the level which raises a red flag if they were to dip below that mark. But do you think the China slowdown has pretty much bottomed, and so the concern from China has receded?
To a large extent, yes.
So what's the strategy across, your investment portfolio? How are you looking at positioning yourself across the market, given that this risk is not so much on the table anymore?
We take basically a holistic view of various development across the world, right from Janet's statement down to what's happening in Iraq. Having said that, in the totality of things, we typically take a bottoms-up approach.
What is your current India strategy? What kind of asset allocation you currently have committed to India?
There are two aspects of it. One is, if you look in terms of the background of the union budget, a budget, as you know, is basically a fiscal statement of government's revenues and expenditure. But in India, budget is typically hyped because it's used as a signaling tool. To the extent what we like is what is not written in the budget, namely in terms of no blame games and no populistic policies. Of course, we don't see even any game-changing policy like taxing based on the period of holding in case of bonds rather than day of holding. Having said that, overall we feel sanguine about the conditions in India. We like the basic, the burgeoning middle class story. We like consumer durables, right from two-wheelers to white goods. We especially like the mass consumption things like something like what is produced by Batas and Daburs and ITCs of India. Would we go into cyclicals? The answer is no. Currently we feel that the valuation is a bit stretched, specifically in terms of cement and some of the metal stocks. We would be okay with something like telecom, but in terms of infrastructure, if that's what you're looking at, we feel there are a lot of structural issues which need to be tackled before that becomes attractive to us. Overall, we are bullish on India, and we like to look at certain concrete steps being taken by the government as we look forward.
What's the call on IT then, post-in-fee earnings?
On the whole, we like IT because IT is more of a global play, and as the global economy improves, we see it to be earning accretive to the Indian IT company. We are aware of grossing up of dividends, which would matter to companies like TCS, but overall, given other things, we are bullish on IT.
In your India dedicated schemes, if you can share with us, what are your top 3 holdings?
Well, of course, we are very agile, so it changes from time to time. Right now, of course, one of the top holdings which we have is ITC. We believe that it's a very secure story, specifically because most of the players are talking in terms of IT's earnings and stuff like that. And they're grossly ignoring the FMCG business of ITC, which is much bigger than Daburs or Batas for the matter. In fact, for that matter, bigger than any other Indian FMCG company. We like the company very well, specifically because of the fact that they are one of the rare companies from India, those who have been able to create market leaders in segments other than the core segment. So that's something which we like across out there. In the mid-cap, we like Apollo Hospitals. I think healthcare has a huge potential in India because of 2 extreme reasons. One is, of course, India has some of the world-class healthcare services, and with the right policies could develop into an attractive destination for health tourism. On the other hand, the organized healthcare sector in India is grossly inadequate. So there are a lot of opportunities which can come in that particular area. Of course, we have seen the CM Narendra Modi now becoming PM talking about healthcare for all. So if he even takes some of the leads from what he has done in Gujarat, it could be a tremendous boost to the sector.
Sanjay, what do you like perhaps are indirect consumer stories or indirect Indian consumer stories. But the problem with some of these consumer stories is that they are priced to perfection. Are you not worried about rich valuations?
Yes and no. We typically take a bottoms-up approach at Silverdale Funds. We, of course, keep the macro factors in consideration. For us, the company level earnings and the management is critically important. For emerging markets, our experience tells us is that it is as important for the management to manage its external environment as much as is to manage its internal efficiencies. So when I'm talking about Bata, for instance, I like Bata not because of the fact that Bata is a consumer story, but we like Bata because the niche leadership it has in the segment. In terms of what they're talking in terms of franchise, which could be a completely different ballgame altogether. And as we discussed earlier in terms of ITC, yes, if you look at P ratio, it doesn't look very attractive. Put into the factor the sort of cash which is generated by the FMCG, it looks dirt cheap.
Among the cyclicals, and especially some of the power names, where is your interest right now, given all the incentives that have come in via the budget and also policy initiatives?
Oh, we are watching it very closely. That's all I can say. Let's take a step back. The problem with the power sector is structural, and we cannot wish it away. The most important thing to keep in mind is that even if the government was to take step, it would take time before it manifests in terms of the earnings of the various companies. And more importantly, unlike the street at Silverdale, we believe that the current way of projecting the earnings of power sector companies is flawed. And it's flawed because of the fact that people are taking a very low input cost. We believe that when these resources would be allocated, be it coal or what it be, they would be auctioned at much higher pricing. The royalties would go up. The profit share of the government will go up. Overall, we believe that there would be a change in terms of how the dynamics will work. Yes, once the bottlenecks are removed, of course, the sector will look interesting. So coming directly to power sector in terms of thermal power producers, without coal linkages, I would be super careful. Yes, in terms of the infrastructure providers, something like PNNGs and power grids, etc., they are good. But as mentioned earlier by your colleague, the valuation are very stretched in that particular companies.
Sanjay, you have exposure to Apollo hospitals because you are excited about Mr. Modi's promise to provide affordable healthcare. PM Modi has also made a promise that soon electricity will be available to all. So his second promise is the bigger promise, because if electricity has to be made available to all, power sector reforms have to kick in.
No, I would beg to differ there. We like Apollo Hospital because the fact that in terms of valuation, we see an uptick. We are expecting the Apollo Hospital's bed capacity to increase by almost 1/3 in next about a year and a half. That makes it is interesting case. The Apollo Pharmacy has turned around and doing very, very well. We like because of that. So as I told you at Silverdale Funds, we typically take a bottoms-up approach. It's not that I would buy any hospital in India. We are very, very selective in terms of the companies which we will back. Coming to the electricity for all, as we discussed earlier, there are structural issues which have to be taken care of before that can really manifest in the right fashion. We are hopeful that the new PM would be able to again pick up his experience of being a CM in Gujarat and having turned around the power situation in Gujarat, would have some sort of positive things on pan-India level, but it will take time.